If I had to describe gold's recent move in just one word, it would be definitely stuck. The price is hovering around 41.30, caught in a tug of war. Is this just a breather for the bulls, or has the rally already run its course? Today, in just 3 minutes, let's break it down. Looking at the daily chart, last week gold traded back and forth between $4,000 and $41.30, repeatedly forming long waves, showing that neither bulls nor bears have a clear advantage. On Monday, after testing last week's high of $41.32, the price has basically been lingering around that area, continuing into this morning's session. Next, if the bulls regain strength, the level to watch is the mid-November high around $42.50. On the flip side, if the market decides to pull back, the uptrend line formed since late October will be the first support. Well, if that doesn't hold, gold could test a 50-day moving average and the key psychological level at $4,000. Lately, traders have been asking two big questions. First, why is gold stuck? The market is pricing in a almost 90% chance of a Fed rate cut in December. Shouldn't that be enough to spark a rally? And second, has gold already peaked in this move? Well, looking at fundamentals, the bullish factors are actually still quite strong. The Fed turning more dovish and falling treasury yields support gold as a non-yielding asset. Plus, soft economic data and a very uncertain outlook keep safe haven demand alive. So, why isn't it moving higher? I think the main reason is that the market isn't panicking. Traders haven't seen any clear signs of a US recession yet, and we still need to watch post-October employment and inflation data. Gold's next view hasn't arrived. Also, regarding a December rate cut, whether the probability was 30% a week ago or near 90% now, the market has already priced in Fed easing repeatedly over the past year. So unless there's a big shock like a Fed put or runaway inflation, the December meeting itself may have a limited immediate impact on gold. The recent strong dollar is also putting some cap on the dollar-denominated gold. And as for whether gold has peaked, I think from a medium-term perspective, support factors like central bank buying and geopolitical safe haven demand are still there. This provides a solid floor for gold at least. But until the next Fed meeting, without any new catalyst, gold is likely to continue its sideways drift at these highs. If the Fed cuts rates as expected, it could give gold a modest boost. The real focus would be the CPI and non-farm payrolls coming out in mid to late December. Well, if inflation remains under control while the job market weakens significantly, that could fuel a stronger rally ahead of the Christmas season. What do you think? Has gold topped out this rally, or do you think the trend can actually restart? And if so, what needs to happen? Drop your thoughts in the comments.